Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to another episode of Markets Tomorrow. This is a quick stock market analysis that we do on the technical charts on Nifty and Banknifty and other major indices, commodities and all that, and then come up with a market view, try to learn something from what happened today and then plan for a better trade for the upcoming day. That's November 22nd, Wednesday, 2023, tomorrow. So if you're not subscribed, please subscribe and share to your friends and colleagues so that it reaches out maximum. So we had the green back again on the Nifty and the Bank Nifty, but Bank Nifty still slightly clipped, and we are at a very crucial zone for anything to happen. Let's get in the charts. We have the market wrap up here. We'll come back to this, but let's get in the chart before we try to understand. So here we go. So we just take out the candles alone. Here's the chart of Nifty, and this is the candle that we have. And what we have is an inverted hammer. It's a small body. Small body is an indice. It's an inside bar. If you consider the big volatile move that happened on 16th, we are still consolidating. We had a big bull bear fight that is indicative of this long wick on top. And the wick and the hammer, the inverted hammer that's probably on the top of the rally could be some indication of a reversal if it confirms when the price goes below today's candle's low. Right, there is a probability. And we have a half a point nearby gains from the Nifty, and we are comfortably holding the position above the 20, 50, 100 and 200 exponential moving averages. That's where we are. At the same time, we have to make a note that we are in the top of a channel, a trend line channel. We had already crossed the previous swing high, which breached the low high pattern, and then we met with the resistance, and we could not clear. The markets could not clear the 19878, where there is a gap resistance, and since then it has been consolidated for the last 3 days. And there is a possibility that this can go back and make another new lower low. It's possible, or it could consolidate the zone and then find an opportunity to break out of that gap towards our new all-time high. Right. So the first resistance would be the 19878 gap. Nearby you have 9900, and then you have 19991. It's 20,000, 20k, big rounding number of resistance. Then you have 20,115 gap resistance, and then all-time high of 20,222. That's the levels on the upside, and supports could come into play at 19,733 immediate next, and then we could find support at 19,600, 640, that zone, and then it could find supports back down to 19,500, where the major support is there, which is a confluence of 20 exponential moving average, and also a gap support is also there. And if that's breached, then you go back to the next gap that can be seen near 19,300 and then 19,200, 19,175 to precise. So that's how it is. Supports the downside, resistance on the upside for the next day. And looking at Bank Nifty, what is this candle? Is a hammer. But interestingly, it has conquered the 20 exponential moving average, which it had lost yesterday. But hammer it's a hammer, and Nifty has an inverted hammer, right? Hammer and inverted hammer shows the big bull bear fight, and it could be a reversal if it is on the top of the rally. Even if you consider this as the top of some kind of a rally, then it's actually not like in Nifty. It does mean that it's confirmed only if price moves above the previous candle's low. This candle's low. That's near to 43,500, 600. If it is breached, then we can confirm. But the good thing is that it is a green day with flattish close to 0.25% only move, but it closed above the 20 exponential moving average. Now we have only 50 and 100 that has to be cleared. Interestingly, this is also in a channel, and there's a long way to go up. It had, even before reaching the top, it had a nosedive on Friday, and it is not still recovered fully in that. It's consolidating in the last 3 days. It's inside bars again. If you look at 2 days before candle, it's inside bar consolidation. That is what is happening. I forgot to mention that. So it's inside bar. Inside bar indicates consolidation, right? So that's what is happening. So the levels. The first level will be to take out this gap that is at 44,000 crucial. It's also mean that it will conquer the 28, the 50 and 100 exponential moving average. So once that is clear, the 44,200, 44,400, 44,768, and then 44,959. That's 45k. So that's the major point where the price action swing highs will be cleared, and that is where the Banknifty could be erupting upside, right? Downside supports could be found at 43,500 if that is present. 200 exponential moving average supports come in at 43,300, and that is pretty. We have trouble, and it could go as low as 42,000 and beyond, and could make a new swing retest or make new swing lows. It's possible. Both are in the channel, but Banknifty definitely less stronger, or it's weaker than the Nifty. Nifty is showing much more strength, and it's maintaining the momentum in the bull zones, and and price action, everything is much more stronger. So Banknifty, the one that's lagging behind. Banknifty is taking its own sweet time to decide what to do. There is indecisiveness all considering that small bodies and long wicks, big bear fights are what is happening in the last several days. So consolidation is in the play. The beginning of a slight expansion can be seen in the Bollinger Band, but otherwise Bollinger Band is also daily showing its consolidation sideways. Right, so that's what inward hammer inside bar indicating potential reversal if we consider it as the top of a small rally. Inside bar indicates, so right, so that's what it is, right? Levels we already seen. Fyers might, it has not come in, but it was slight green other day. Probably today also it might be slight green. It is not slight green other day, but week to week basis it was green on the Fyers last week. The small selling, so today also there might be small buying that may come in potentially, but Fyers are selling less at least. They've been selling since 17-18 weeks now, and then until that pauses or that ceases to, that is when the market will erupt and break out. So momentum has picked up slightly. Momentum has climbed back into the RSI 60 above zones, bullish zones on the Nifty, and momentum is still sideways but rising up in momentum, taking a turn and rising up in the sideways. Is that what is momentum for the short-term daily charts for the Banknifty? Views and dice are still green. Dollar has cooled off. Rupee also has cooled off. Crude oil is spiking up, and but things looks okay. So global cues does not show any major risk there. VIX is 12, flattish but slight spike up. The market had gained and closed, but still the VIX has not cooled off, so it's spiking up slightly, which could mean that potentially today's move may not sustain. Probably, since VIX is spiking instead of cooling off. But still, VIX remains in the low vol regime. So technically, the charts are showing momentum. It is absolutely showing consolidation. It is not showing strength in Nifty for sure, but Banknifty is weak, and that's a risk that you have to keep in mind. Across major sectors, if you see, it is all the sectors. Across sector bullish movement is there. So only one sector, FMCG is not having a bullish momentum in the short term. Others are all gaining momentum in the short term basis. And IT and FMCG did not do well today, and it was flattish close red, but others are all close green today. So overall things look good, but Banknifty is the one that has to show. And there is indecisiveness. There is a crucial resistance point where the market is. Looking at the charts, is very clear where we are, so we have to be careful, right? So investors can always go in for buying quality stocks if there is a dip that's happening, but when you're a trader going long, it's not time yet unless you get the clear confirmations have not come in the charts. That's what you have to keep in mind. So stay cautious, have hedge positions, don't risk too much. If the VIX is further spiking up, then that's where you have to cut short your position size and manage the risk. That's all that we can do. But probabilities and levels and all things are very clear. So tomorrow is the Banknifty expiry, and for the Banknifty expiry, the Nifty levels are showing that top resistance maximum seen at 19,800, the maximum resistance is seen at 19,800 and 700. So it's between 700 and 800. It's seen as of from one day before the expiry. But what we are interested is in Banknifty, which is showing a wide range. 45,000 is the highest resistance seen, and support is seen at 43,500. Very wide range. So option traders have no clues what's going to happen. Is what it indicates. PCR is also not bullish for the bank. 0.62 PCR is bearish actually. Nifty is 0.89. It's not bullish enough, but it's closer to bullish. So, right. So open interest is not giving that clear view on Nifty for tomorrow. Anything could happen. It's giving a wide range, but definitely we had a future SOI buildup, which is which is short covering in the Bank Nifty. So there could be the Bank Nifty is taking its own sweet time to break out. Is what I feel. But otherwise, market is consolidating at a crucial point where things could go into reversal or break out. That's where we are. So cautiously trade. Subscribe if you're not subscribed, and share with your friends and colleagues. Okay, that's all I have for tomorrow. Happy trading, happy learning, happy investing. Bye bye.